Meanwhile, we also have with us Abneesh Roy, who joins us because FMCG and retail stocks in focus. Retail, obviously, we saw some traction build up in trend in yesterday's trading session. And FMCG stocks, by and large, because of multiple factors, obviously demand as monsoons have been delayed. The sowing this time around has been a lot lower. So how's rural panning out? And then there is competition, which is likely as well, with Reliance targeting 1 lakh crore rupees in revenue by FY30. All of this at a time when crude prices are down to about $72 back below the war started. So all these factors, multiple moving parts. Abneesh joins in. Abneesh, let's start with the demand part and the competition part. How do you foresee rural demand given the delayed monsoon and perhaps lower monsoon this time around? And how would that reflect in your estimates for the next couple of quarters?
Sure. Hi, good morning. Thanks for having me. First, of course, from a near-term demand Q1 specific, I expect a strong quarter. If you remember, Mangalam, we have seen very good recovery across the board in FMCG results in Q4, where I think most companies have done multi-quarter, multi-year high. I think broadly that trend is continuing. In Q1, we expect strongest numbers from Nestle, Marico, Pidilite, Asian, Berger. Even the summer categories like Varun Beverages, the ice cream companies will do quite well. Imami, which has also been a laggard in Q4, that also we expected double-digit sales growth. Now coming to the bellwethers like Hindustan Unilever, Godrej Consumer and many of the other companies, again, we expect close to double-digit sales growth and 7% kind of volume growth in most of the cases. So good numbers, at least near term. Coming to a specific question of the monsoon deficit, I think that's a key concern. That's why we have seen the FMCG stocks not react in spite of the crude price fall, which is a positive. They are not reacting to it because clearly investors are worried on El Nino. Now we have done a 10-year detailed analysis of volume growth of FMCG sector as per the average with Unilever, because that is obviously the bellwether of the sector, and then the deficit and how the rains have been. What we have seen is there is no big correlation, at least last 10 years, between the deficit in rains and volume slowdown for the sector. And also we have tried to see if there is a lag effect. So this year, okay, demand is okay, but next year is there a fall? Again, on a lagged effect, also we have not seen an impact. My sense is the headline numbers mask many things, right? We have to see spatial distribution of rains because there can be flooding in some areas and drought in some areas, and overall headline numbers are okay. Then both those two things are not good. So we will monitor the monsoon quite strongly, but spatial distribution is very important. A lot of the state governments are giving 2,000, 3,000 rupee free to most of the rural customers. So as of now, rural demand, there is no concern. Q3 is where I think the El Nino impact will be known, because next 3 months anyway, monsoon will be there. So the deficit impact will start from Q3 earliest. Coming to a question on competition from Reliance, of course, Reliance is very, very serious competition. Campa Cola, great performance. I think 4,700 crore gross sales, which company has done in FY26. No one would have thought that 2 years back, but we have been highlighting that Campa 10 rupee pricing, very strong dealer margins. The brand is coming back strongly. Is a big threat for the entire sector. But next 2-3 quarters, Varun Beverage will also do well because of the summer heat wave. El Nino plays a strong correlation with strong demand for summer categories. So as of now, this year, Varun should do quite well. But yes, longer term, I think Campa Cola will continue to take share from the other legacy players, plus expand the market. Of course, Reliance has also done acquisition of SIL, etc. And I think clearly 22,000 crore is a great number. But my sense is in a lot of the HPC, I think current listed companies and Reliance both can coexist. Campa Cola clearly in that industry, 50-60,000 crore, there was a big opportunity for a 10 rupee pricing. I don't think in other FMCG categories that opportunity is available. But yes, Reliance has to be taken seriously for sure.
All right, Reliance has to be taken seriously for sure. You're not the only one saying it. We speak to a lot of business leaders as well, and all of them do say that this is a fairly formidable competitor out here. Speaking about competition, let's speak about the paint sector. Competition had normalized. Things were looking up for the paint sector. And as we speak, oil prices are lower as well. These companies, most of them have actually done way more than the inflation, because at that time, that's what seemed important. But now as we move forward, do you expect companies to go ahead and roll back those price hikes that they've taken, and then as a result of which the double-digit revenue growth that was expected because of the price hikes, that may have to be curtailed a little?
Very good question. So yes, definitely paint companies have demonstrated very strong pricing power and discipline in spite of the disruptive new player. The disruptive new player also took double-digit price hike. So my sense is specific question. First half, I don't see any risk whatsoever to the double-digit sales growth because it will be a healthy mix of around 7 to 8% volume growth and say 7 to 8% net pricing in spite of the downtrading impact of putty, construction, chemical. What happens to H2? Because always a lagged effect is there. My sense is if the crude remains at that $60, $69, 4 to 5% price cut is possible in H2 by the paint company, which means still, I think even in H2, the sales growth will be double digit in my view because 7-8% volume growth will come and 2 to 3% pricing hike will still be there in spite of the cut. I don't expect a full rollover. That is very, very unlikely because companies will use this opportunity to definitely grow deeper in terms of advertising and distribution and even innovation. But yes, part of the partial hike will be reversed in H2 if crude remains at $60, $69. So we'll monitor that. But double-digit growth as of now, I don't think even in H2 there's a concern. Will it be slightly lower than initial estimate? Of course, it will be lower, but that doesn't impact EBITDA, right? Because it's a pass-through of a deflation and the raw material only.
All right, Abneesh, we can't let you go without asking you about Trent. It was trending yesterday. Post the AGM made the commentary that came out, the street latched onto the stock. I know it's half from the top, but what's your view at these levels?
Yes, definitely. We continue to like Trent. I think Q4 numbers were decent. Near term, I think the buoyancy will remain very strong guidance for the longer term on the Zudio, but that's a very, very long-term guidance. But yes, we do see that in the current valuation and overall they have seen recovery also. It should be a decent valuation comfort from a top. We are positive on Trent. In that space, we like Page and Titan a bit more, but we are positive on Trent also.
All right, Abneesh, we leave the conversation here. Thank you very much for joining in. 9:10. Let's get in some calls. Sudarshan